Hello everyone, this is Sebastian McMahon from IA Financial Group, and I'm back with the weekly economic review for the week ending December 2nd, 2022. So let's start again with the look at this week's markets at the close on Thursday. So positive for bonds, positive for equities, but as I'm recording this Friday morning, markets are not open, but most of this seems to be reverting today. Because there was some optimism in the markets. I'll get into that in a few minutes. But the labor market report this morning flies in the face of this view, and we're seeing a reversal of fortune here. So where will the market close the day? I don't know, maybe we'll return into positive territory, but this is at risk here. Maybe I want to bring your attention to the year-to-date returns for the TSX. Close to 0%, so very interesting to see how the TSX was able to outperform even to the downside this year in a spectacular fashion. So maybe looking at the data for the week, China, it's still too early to lay COVID-0 to rest. This is still our opinion. Look at the chart on the right. This is the number of new cases that are confirmed in China, and of course these are the numbers that are officially reported. We can always maybe doubt the quality of this data, because recently there was some news that we had the first death from COVID in China in 6 months, so maybe we can doubt the veracity of that claim. But still, new records are being made for COVID cases, leading to stricter restrictions, leading to protests in the streets because they're building some quarantine camps, and it's pretty strict out there. So you probably saw the images in the news, not some pretty pictures over there. But when will COVID-0 end? Maybe it's still early to expect it to end now. There might be some fine tuning, but it's mostly political now. It's how the government stands up to the population. So we'll see where we end up, but likely this is a 2023 story. When China decides to reopen completely, that's going to be a huge tailwind for the global economy. There's a lot of potential for growth that's going to be unleashed when it happens, but this is a very fluid situation, and we'll continue to follow it for you. Now moving to the US, the economic slowdown continues. The ISM manufacturing index it's been sliding since early 2022, and now we're in negative territory for the first time since 2020. So negative territory, meaning that it's below 50 for the ISM manufacturing index, means that now the manufacturing sector is in contraction zone, and this is a very strong correlated indicator to GDP. So here we are. So that might be a positive for the markets eventually when the economy is getting worse and worse. Then central banks can start to maybe think about supporting the market, and markets tend to anticipate this pivot coming. So we are of the opinion that the pivot likely it's a late 2023 or early 2024 story, but this is maybe one check in the box that, okay, maybe at some point central banks will become more into a support of the economy eventually. So this is where we're at, and the recession risks for 2023 are very real, and this index is showing it again. Moving to Canada, strong GDP growth in Q3, but the details paint a bleak picture. So on the left, you see that the growth in GDP was around 3% again. But on the right, the table here shows that even though real GDP growth was strong, it was mostly exports and final domestic demand, the part that's highlighted in yellow. This is consumption, investment, everything that is spent domestically, and this is contracting. So that means that we have conditions that are close to recession conditions internally, even though the headline GDP number remains strong. So that also goes hand in hand with our view that risks of a recession in 2023 are elevated, 70 to 80%. We still think that is the case. Moving now to the Fed and the markets. So the Fed chairman, Mr. Powell, made a speech this week where he hinted that smaller rate hikes could start in December, and the market was already pricing that. So smaller hikes means that we had 4 consecutive 75 basis points hikes. Now the market was already pricing a 50 basis points one, so nothing new there. But sometimes the market just wants to hear positive news, and you know how markets are. They can maybe start rebounding on shaky foundations. So there seemed to be some of that, or at least the sentiment was turning overly positive. And on the charts here, you see that there was a CPI report that was a bit friendlier than expected recently, and now the comments from Mr. Powell made the stocks rebound and interest rates fall. So this was the picture as of Friday morning. But now we have the job report that came out, and the job market is a very important indicator for central banks and for the Fed. So the Fed is looking at the global economy slowing down, inflation sticky, but labor market is pretty much in the center of that. They want to see a labor market that slows down, and they want to see less wage pressures. Well, we had the job market that remains very strong, above expectations for the number of jobs created. We had 263,000 jobs in the US, 284 last month. That was an upward revision, and wage growth on a monthly basis was twice expectations and the strongest since January. So it's not completely not in line with what the market would like to see, meaning the economy, the labor market slowing down enough to show that maybe the job could be close to be done from the Fed, and that maybe they could start to pivot sooner than expected. Thus, stock market lower, interest rates higher this morning, and we'll see where that leads us. The next decision from the Fed is on December 14. So until then, let's see what happens. That leads us to what to watch next week. We'll have the Bank of Canada rate decision next Wednesday, December 7. So Bank of Canada next week, Fed the week after, and then nothing else by the end of the year on the North American central banks front. We'll also have the ISM Services PMI, the University of Michigan Sentiment Index. So very important data points coming to set the tone, let's say, for the month of December. So that wraps it up. To follow us, ia.ca/economy. You can subscribe to the newsletter if you haven't done so. Listen to our podcast, Economy and Finance 101. There's some new material that's about to be dropped. Social media, Twitter, LinkedIn. So many ways to reach us. So thank you for following us on a weekly basis, and I'll be back again next week.